students. Today we discuss about 11th accountancy morning video. So in this video we continue the same chapter, books of prime entry. So in this chapter we already discussed about various topics, that is source document, various types of source document, and also double entry system of bookkeeping, and advantages, features of double entry system of bookkeeping, and transaction types, cash transaction and credit transaction, and also the bank transaction. Now in this video we discuss about approaches of recording transaction. There are two approaches should be followed by the business concern to record the business transactions, financial transactions, that is accounting equation approach and traditional approach. So accounting equation approach, the relationship of assets with that of liabilities to outsiders and to owners in the equation form is known as accounting equation approach. So if any business concern, they should follow this approach. They can take assets, liabilities, that is liabilities to owners, liability to outsiders should be taken, and assets will be taken. The relationship of various assets and liabilities should be shown in equation form. That system is called as accounting approach system. And then under the double entry system of bookkeeping, every transaction has twofold effect, which cause the changes in assets and liabilities or capital in such a way that an accounting equation is completed and equated. So it is the accounting equation, that is capital plus liability is equal to assets. So based upon this equation, they can record all transactions of business. Financial transaction of business should be recorded based upon this equation, that is capital plus liabilities is equal to assets. Capital can also be called as owner's equity and liabilities as outsiders equity. So accounting equation is a mathematical expression which shows that the total of asset is equal to total of liabilities and capital. It is based on the dual aspect concept of accounting. That means total claims of outsiders and the proprietor against a business enterprise will always be equal to the total asset of the business enterprise. So then only we consider that business will be running in right way. As the revenue and expenses will affect capital, the expanded equation may be given as asset is equal to liability plus capital plus revenue minus expenses. It is an expansion form of a equation. So therefore, under this approach, accounts are classified into 5 categories: asset account, liability account, capital account, revenue account, and expense account. So asset account means any physical thing or right owned that has a monetary value is called asset. The assets are grouped and shown separately, that is land and building, plant and machinery, furniture, everything. Liability account is a financial obligation of the enterprise towards outsiders are shown under separate heads as liability, that is creditors, outstanding expenses, bank overdraft, bills payable are some of the example for liability account. Capital account, financial obligation of a business enterprise towards its owner are grouped under this category. It is called a capital account, that is capital contributed by the owner. Revenue account means accounts related to revenue of an enterprise are grouped under this category. So what are all the income received by the business concern from the outside, that is sale of goods, rent received, are some of the example for revenue account. Expense account. Expense incurred and losses suffered for earning revenue are grouped under this category. Purchase of goods, expenses paid towards salary, wages, etc. are comes under expense account. So a transaction may have the effect on either side of the equation by the same amount, or it may have the effect on one side of the equation only by both increasing and decreasing it by an equal amount. So increase in capital and increase in asset. Whenever if any amount introduced to come as a business means it affect capital and cash. That is, it will affect in the capital and asset. Cash comes in business and also the asset value increase. And financial obligation by the business to owner, that is capital. That is capital is equal to asset, that is capital and cash. Both the amount will be 1 lakh. Next example, decrease in liability and decrease in asset. That is paid to creditors. Creditors means credit supplier. That is the person who supply goods on credit basis. In this example, whenever we paid cash to creditors means cash goes out. So the asset will decrease because cash is one of the asset. Creditors are paid. So the financial obligation is amount paid to creditor, outsider. That is liability. So decrease in asset. So liability also decrease, asset side also will decrease. So both side will be a minus amount. And then decrease in one asset and increase in another asset. In the asset side itself, the amount will increase and decrease. That is furniture purchase for cash 5,000. That is cash paid, cash will decrease, furniture will increase because furniture comes in. So in this example, in asset side only one asset increase and one asset decrease. And then decrease in one liability and increase in another liability. So in this example, both the aspect will be in liability side. That is, accept a bill drawn by creditors 10,000. Bills payable will arise. So liability will increase. Reduction in creditors amount, that is decrease in liability. So both the aspect will be recorded in a liability. Transaction affecting more than two accounts. That is goods costing 30,000 sold for rupees 40,000. In this example, one transaction will affect a 3 column. That is goods go out, stock will decrease, that is decrease in asset. Cash comes in because of we are selling the goods for cash. So cash column will increase, that is increase in asset. While selling the goods, there will be a profit or loss. In this case, goods costing 30,000 is sold for rupees 40,000. So here 10,000 will increase. We are selling the goods more than the cost. So the 10,000 profit will be increase. So the capital will also be increase. So in this example sum, three accounts are affected. 3 aspect. Even though 2 aspect is there, but this transaction will affect 3 account. That is asset account and also capital account and one more asset account, that is stock. Cash is one of the asset, stock is one of the asset, and capital is one of the liability. Because of the financial obligation to the outside to the owner by the business will increase. So let us say one example sum for finding out the missing information by way of applying accounting equation. Here illustration 1, they are asking complete the missing items. Out of 3 information in accounting equation, that is asset is equal to liability plus capital. It is accounting equation. Based upon this equation, we need 3 information. Among the 3 information, any 2 information are given in the sum. You have to find out the missing information. Whether it may be capital, it may be a liability, it may be asset. In the first case, asset 30,000, liability 20,000 is given. So if the accounting equation will be right and left side should be equal, means left side is 30,000 but right side is only 20,000 is there. Here plus symbol is there. Liability 20,000. They are asking to find out the capital. So by way of shuffling and adjusting the amount, the capital amount will be 10,000. Because of equation means left side and right side should be same. Left side is 30,000, right side is only 20,000 is there. So capital amount 10,000 will be a missing figure. Likewise, second example also. Asset is 60,000, liability is 25,000. They are asking capital. So the capital amount will be the difference between these two amounts, that is 35,000. And then third example, that is a C part. Asset they are asking, liability given 25,000, capital is given 30,000. Here plus symbol is there, so you should add it, liability and capital. The total amount is 55,000, that is the asset value. And D case, they are asking asset, liability and capital is given, liability 10,000, capital is 80,000. If you add these two amounts, the equation will be, that is the missing asset value will be 90,000. In the next case, asset is given, capital is given, they are asking liability. So you should subtract it, 25,000 and 15,000. 10,000 is the liability value. Because of left side total is 25,000, right side out of 2 amount, 1 amount is 15,000. So if you subtract these 2 amount, the missing figure will come 10,000. Last one, asset 40,000, capital 30,000. They are asking liability. The same 10,000 rupees will come. Difference between asset and a capital. So here also the solution is given for that example sum. You can verify it. So likewise, if 2 mark, 3 mark question will be asked, calculate the missing figure. Based upon the accounting equation, you can easily calculate the missing amount. So student, you can go through this example sum and go through all the topics. You can write the theory in the white notebook, long size notebook. Do this example 1 in your ruled accounts sum notebook. Likewise, you can work out exercise 1 also. Exercise 1 also the same procedure. You can work out yourself. Keep the notebook safely and bring it on school day without fail. Thank you.